This is the Note Closer Show, where you get the latest developments in distressed note investing and learn the secrets of how you can control millions of dollars worth of property for pennies on the dollar. Get educated and entertained by someone who has closed thousands of deals and lives to support you in achieving the same. Now, here's your host, CEO of We Close Notes, Scott Carson.
Good morning, good afternoon, good evening, everybody. Welcome to this episode of the Note Closer Show. As always, Scott Carson, excited to be here with you today. And today's topic, I wanted to share something. It's been a while since I've talked about the subject. I said, well, why not bring it back up? I've been getting questions and bombarded with emails and some comments from people asking like, okay, Scott, I think there's going to be a big downturn in the market. I'm like, yeah, duh. And you have to look at all the numbers are coming out, and there's articles coming about. Wallet Hub had an article on the top 100 cities are being hit the hardest, and that includes 5 cities in Austin, or 5 cities in Texas, and a variety of other the major metroplexes that have really been hit hard with people not only filing more for bankruptcy, but you have search ability, people looking for loans, people looking increased credit percentages in their credit cards, means they're using their credit cards more, and then also credit scores dropping across the country. So this is an interesting article we'll talk about on a later episode here in a couple of days when we have Merrill Chandler on from Get Fundable. But one of the biggest questions people are asking is like, okay, Scott, how do I find banks that have non-performing notes? And I'll tell you this right now, it is not difficult to find banks. Literally, you could jump on the FDIC.gov list and start looking at quarterly reports if you wanted to. That's a pretty tedious process. You could use Distress Pro to jump on there from Brett Palumbo and start looking at his software, which will look at the quarterly reports and start analyzing, help you start tracking stuff. You can buy the Bauer Financial List for roughly $300 to $400 to give you a breakdown on which banks have non-performing portfolios or non-performing assets percentage of the portfolio and how much they have. That's not going to give you an email, or it'll give you a number, a customer service number, but you're still going to have to do some old-fashioned 4-letter word work, W-O-R-K. You got to do some work to find that. But there is an easier way to help you prime that proverbial pump for very little money and very little time. And we all love that. If we can save time or money, great. And this is actually a free list that I'm going to show you. Whoa, free? That's another 4-letter word. Better watch out. Now, before I talk about where we have where we found this list and how we've used this list for coming on a decade now, okay? I want to clear up some misconceptions out there. Banks will sell you non-performing notes. They will sell you one-offs. And I'm not talking, except the bigger banks. I'm talking the top 5 or 10 banks. They're not going to sell you a one-off residential note, okay? But there are plenty of other lending institutions and other areas out there to find portfolios or one-off notes that you can cherry pick from or add to your portfolio. Now, the list I'm going to talk about, it's not everywhere, but it does include resources from every state out there for the most part. Now, for those of you guys that don't know, I got my mortgage broker's license. Sorry, my loan officer's license, not my mortgage broker's license, but my loan officer's license going back to 2005 is when I first became a licensed loan officer. And in the state of Texas, it used to be you had to basically pass your Group 1 your insurance license, and then you wrote the state of Texas $125 to become a loan officer. And then you boarded your loan officer's license with a mortgage broker of some sort. And so I did that initially. My first loan was actually with my parents. I did a refinance on their house. They were at like 12% interest rates. We were able to roll in all their credit card payments, their bills, other stuff into their mortgage, and their payments went down by half than what they were paying out. So the water was starting to come over the side of the boat in half. And then we also set them up on bi-weekly payments or bi-monthly payments so that they paid off the house in 7 years versus 20 years. And my dad actually cried at the closing table. And that's one of the things I got so passionate about financing, especially loans. I then later on became a mortgage banker when I worked for Bank One and JP Morgan Chase, and then went out and became a loan officer as we started Aerial Capital. It's my buddy Boyd Pops. And then, of course, we all know what happened in 2008 when I left that and got in the note business. But along the way, as I was sitting here in 2008, as I was leaving Aerial Capital to start Inverse Investments and start that route as a note investor, I started looking, how do I find people? And I started thinking, I was like, well, if I'm going to be chasing mortgage bankers, most of the major banks, they have a federal charter, so they're excluded from filing at the state level. If you have a federal charter, it's different. And I'm like, okay, well then how do I find those? Well, around this time, 2008, 9, 10, we all know what happened and resulted in the national license, in a NMLS, National Mortgage Loan Originator, MLO's license, okay? And what used to happen is states would require mortgage companies and mortgage bankers and to register with each state. You had to register to do business in Texas. You had to register to do business in Oklahoma. You had to register to do business in Illinois, California, all those states. If you want to do business, then you either A, had to pass a license for that state, or if you were in one state that took enough continuing education, paid fees, a lot of times your license would roll over to that state. At one point when we were doing loans in roughly 30 different states. Now, part of that was licensing, but also as part of that was we were partnering up with a nationally chartered bank called World Savings. We were able to originate in a bunch of states through a subset of World Savings. Now, World Savings is gone. It became Wachovia. Wachovia got bought up by Wells Fargo back in the day. But anyway, going back to my mortgage brokers thing, I said, wait a second. Mortgage brokers that are outside, that have like a warehouse line, that are independent of a big federally chartered bank, still have to register with the state. Aha! Ding, ding, ding. All right. That idea is like, I might have an idea here. So I did that. I jumped online and I said, okay, what department in Texas handles mortgage broker licensing? And it's the Texas Department of Savings. It's basically, I'll share this exactly with you so you guys can understand this, because this is an easy thing. It's the Texas Department of Savings and Mortgage Lending, okay? sml.texas.gov, savings mortgage lending, sml.texas.gov. So I go there, and the website's been pretty much the same for the most part. Obviously, they change updates, but they handle the licensing of mortgage brokers, servicers, and mortgage companies doing business in Texas. And I started looking at other states, and not many states have this availability on their state websites. And it's not always the Department of Savings and Mortgage Lending. Some states is the Department of Insurance. Some states like California, it's the Department of Real Estate that handles that. So each state's a little bit different out there. Now, I actually paid California back in the day. I called them and said, hey, I'd like to get a list of all your mortgage bankers and servicers that are licensed in your state. And I'd have to send a check in for $50 with a self-addressed stamped envelope. And they would send me back a 3-inch floppy. I'm like, a floppy? What the hell am I going to put this in? A couple of years later, they sent back a CD-ROM. Now I think it's a download, but I don't know if it's $50 anymore. But what I found is like, okay, when I started going to some different states, I found that I could download this information for free. Now, why is this so valuable? Well, because if you're looking for deals, if you're looking for note deals, you obviously target banks, but there's also a lot of mortgage bankers and servicing companies out there that have product that you can cherry pick from. Now, mortgage bankers are often originating loans. Sometimes they'll keep it in-house in their own portfolio. Other times they'll have it on a warehouse line of credit that they're selling off to the bigger banks who will provide that warehouse line of credit. But sometimes they have to buy that stuff back and hold it on their lines. For every, for basically every $100,000 loan, it's costing them, 10 to 20% in fees off that loan that they can make in a year. And rinse and repeating in the velocity capital. If you lend out, if you're making 3 points on 100 grand, your goal is to get that 100 grand out 12 times a year so that you're making 36 grand off that 100 grand loan by rinse and repeating, originating loan, funding the loan, boom, warehouse line, a mothership, Wells Fargo government comes back in, pays you 103 for it, boom. Now you've got that 100 grand to go lend out again. That's how a lot of mortgage bankers make their money. So getting back to this list, if you go to, like I said, sml.texas.gov, it's the Department of Savings and Mortgage Lending in Texas. You can just Google it. Literally on the front page, it will show you on the right-hand side, it says quick links, apply or register, MLS, National Mortgage Loan Servicing Register information, NMLS, it's a tongue twister, okay? Download list of licensees and pay penalties online. Well, I'm not paying penalty. I'm not looking for LLS information. I'm looking for the download list of licensees. So if you click on that button, it takes you over to another page and download a list of licensings, and it's self-reported to Texas MSO by licensed company or individual. It's usually pretty much current up to the previous business day. So it's a list that shows you who's licensed to do business in Texas. So then basically it gives you three things to download for free. Company roster download, a branch roster download, and a sponsored individual roster download. You don't need branch roster, you don't need sponsored individual. What you want is the company roster download. So you click on that button, it takes a couple minutes, but then it downloads a huge list to you, okay? Downloads an Excel spreadsheet or a CSV, I'm not sure exactly, I think it's a CSV, but anyway, downloads an Excel spreadsheet. And on this spreadsheet, some of you guys have been through our workshop before, as soon as talk about this, it's like a ton of contacts. I mean, and you always know when lending is going good in the nation because I have downloaded this list for 10 years now. It marked the 10th year I've downloaded. I was looking back because I've saved the list every month. Every time I download it, I do it on a monthly basis because there's always new people getting licensed to do business in Texas. Now, why is Texas such a great place to get licensed to do loans in? Because of our fast foreclosure list. You know, we do everything faster, fast highways, fast executions, and fast foreclosures. It's a great place to be a lender because you can foreclose quickly if somebody's not paying. It's also not too difficult to license. You now have to pass a test. You have to go get fingerprinted, go through pass an FBI background check, make sure you're not the Unabomber or something like that. But it's not that difficult. Pay your fees, pass a test. It's a pretty easy test to pass these days. Okay, now you're not just paying a $125 fee and passing your insurance test. Now you've got to take a different test, but that's okay. But it downloads 4,221 total contacts. Now those contacts, those 4,000 plus contacts, are spread over, it's roughly about 7 different classifications. Now you have the mortgage banker registration, which yahoo. Okay, the residential mortgage loan service registration, mortgage company license, okay. And then you have 4 other categories that you really don't need that are on there, and it just kind of tells you who's licensed, who's got scheduled to get licensed here. You have auxiliary mortgage loan activity company license. That's like, I don't know exactly. Credit union subsidiary organization license. You don't need that because you're not going to see a lot of loans from credit unions on residential commercial loans. And here's another thing. I forgot to say this. If you're a commercial lender, you don't have to go through the licensing side that you do on the residential side. That's the commercial lenders, you can start doing commercial loans right today if you want to, if you find somebody to help you out with it. Okay. But going back to that, you have the auxiliary mortgage loan activity, you have a credit union subsidiary, you have an independent contractor or processor, don't need that list. And then you have a financial services company registration. Okay. So out of those total 7, you're going to remove those last 4. Okay. Now, the most important thing, I might even remove the mortgage company license because you may not need that because that's a lot of people. They're just mortgage companies. They're not originating. They're literally just kind of brokering stuff. They don't usually have a lot of loans on their books, okay? Because they're just originating and selling off. They're just originating on behalf of somebody else and selling off, okay? So you don't really need that list, but it is a pretty good size list. I mean, literally, it is probably the biggest chunk on here. And now I have had some luck marketing out to this list, and I'll get to you why this list is so amazing. Now, out of that 4,221 total contacts, the mortgage company license makes up a big chunk of that, 2,833. Okay, so roughly, what is that? 75%. We'll just say that. It's actually about 67%. Because 28 divided by 42 is 67. So you can actually get rid of the mortgage company license. Now, the beautiful thing about this list, when I talk about marketing to it, it is literally one of the easiest things. It gives you the name of the company, the MLS ID, license type, the status, if it's approved, expired, voluntary surrendered, the status date for that, when it was originally issued. Are they authorized to conduct business in that state? Yes. It gives you the address, their mailing address, their physical address. So address, city, state, zip. So if you're looking for, mortgage bankers or other, servicers that are in your state, if you're not in Texas, there are people in just about every state. I don't think Alaska's on here, but anyway, you get the zip code. You have a phone number, which is sometimes a customer service number, or it is a direct line. You get the fax number, who uses fax. And then you have an email address. Cha-ching, 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 baby, ladies and gentlemen. you have a email address. Now, the caveat about this email address, you don't have a contact name. Now, if you look at the email, sometimes it's going to be like Chris Mason at Packers Mortgage Company. You got a name there. You have a phone number there. Sometimes you have an extension added to that with a phone number. So you have somebody you can call to, right? But this email address is either usually the person in charge of the company or the person in charge of licensing. Whoever the person is making sure the loan officers or the mortgage brokers, where they stay up to date with the licensing. So I use this email list as a phenomenal list to start mailing to. Now, what you have to do is be careful. We'll get to mailing out to them in a second here. But the phone numbers are great because now you have a direct line of contact. Say, hey, I'm trying to track down the person in charge of, your secondary marketing or your bad loans on your portfolio or warehouse lines. Now, the thing is, it's going to be a different kind of call out, kind of different message, or even email address, email that you send out, depending on with how you segregate this list. So, give you a bit of an idea. We talked about you got 2,800 mortgage companies on there. If you remove that and just really keep the two hot lists, the hot list, Scott's hot list, baby. Yeah, after hours with Scott. All right. The mortgage banker registration list, if you filter down to those that are approved still in the state of Texas, the mortgage banker, that's probably the number one list out of this. Mortgage bankers. Those are people that are originating that or that have warehouse lines. Okay. There are 414 approved mortgage bankers doing business in Texas as we speak right now. Now, they're not just doing business in Texas. They're obviously doing it in a variety of states. Now, some may just be Texas, but I'm willing to bet any good mortgage banker is going to be looking to add licenses or affiliations with other companies across the country. Now, these may be net branches. Different mortgage companies that are mortgage bankers that have branch offices across the country. We've seen a lot of that. And it may just be one person entire, the whole, 25 branches or 10 branches, whatever, who's in charge of licensing. That's okay. Still, it's an effective to reach out to 414 mortgage banking companies is a good starting point. Now, the next most valuable list on this is the residential mortgage loan service registration. Now, I was actually kind of surprised on this. When we filtered the list down, there was 331 licensed loan servicers. And if you basically look at who is still approved, it shows 271 are approved to do business in Texas. Now, what was funny, that means there was basically 31 plus 29, 60 that aren't approved to do business. And I also know that some of these servicers, when I looked at the names, I won't drop any names, but some of them are kind of bigger names out there that are servicing loans. And I know they're servicing loans in Texas, but they're no longer licensed or approved in Texas. That's a big, that's a no-no. Okay. But they're still in business. They're still doing business and active. Why is the loan servicing registration so important? Well, those are really, as we say, if you got 331 or 271, 71 are still approved to do business in Texas, these represent hubs. And I like to say loan hubs because they're dealing with investors like you, me, some bigger guys, whatever it might be. They might have a variety of clients, anywhere from 100 to thousands of other loan originators or banks or lenders or note investors like you and me who have bought debt and are having it serviced. Now, this is on the residential side of things. So that becomes 271 potential sources for finding deals, portfolios. Now, what you do with this list is you don't call the servicing company and say, hey, I want to speak to your secondary marketing department. They're going to be like, we don't have one. Okay. So what you do with this list is you call and say, I need to speak to somebody in charge of business development. Now, why business development? Well, I learned this from my buddy, Joel Markovitz, who's been in charge of business development for several servicing companies, Newview, Land Home, and a couple others to bat around in his years in the mortgage industry for the last 20 years. But you want to speak to the person in charge of business development because this is the individual that's going out to conferences, going out and approaching mortgage companies, banks, trying to get that bank or lender to give them the servicing. They're literally trying to give them their business so that their staff can service the loans for a fee each month. We had one of our students in the past has been Bill Coppage. who was in charge of business development at Face Servicing, big lender out of Chicago. And he taught me, like, yeah, that the business development guys are getting paid a percentage of servicing fees each month from what they bring in. If you've got a good business development guy or gal, they're really making more of their money from those fees on a monthly basis. So the last thing you want to do is call and ask to speak to this person in charge of business development and say, hey, do you know anybody, any of your clients that have any non-performing stuff or loans that they're looking to move or sell? Because if you say that, I mean, that's what you want to ask, but you have to realize that sounds immediately like, oh, you want me to see about moving loans off my portfolio, so you're taking money out of my pocket? That's a big no-no. Okay, don't want to do that. What you want to do is add the magical statement, and it's like a magical statement. It makes them all warm and fuzzy because now they're like, I might be willing to help you out. I want you to retain servicing. Provide that it's enough loans to keep on your portfolio, because some servicers have loan minimums. You know, some of them want at least 100 loans, some want 10, some want 20. It all varies on the servicing company. Some want bigger portfolios. They don't want to deal with the one-off guys, the smaller one, because it's just not worth their time. So that's the thing. Look, I would love to talk with any of your clients that maybe have loans they're looking to move, if they're performing or non-performing. Like Loan Servicing Center, they're a lender, a servicing company out of California that just wants performing loans. They don't want to deal with non-performing because they don't want to jump through all those extra things they've got to do. So that might be a logical source. Hey, do you have any of your clients that have non-performing on your books that they might be looking to get rid of it, or they're looking to move them this quarter? So that's a really thing. Think about that. 271 or 330, because some of them are still worth dollar for dollars, the ones that are the license are expired in the last year. You know, potentially 330 hubs of sources for notes for you. And go from there. If you made 50 phone calls a day on that would take you roughly a week to 2 weeks to make those phone calls. But you would know all the business development guys or gals, or be making relations with them, and go from there. Now, I always like to send an email to the license department on that list alone, do a smaller list, 331. It's an email that said, hey, who's in charge of your business development at blank servicing? You know, you might do individual emails. I would still recommend you do a blast out to them through MailChimp. Now, the most important thing we're seeing happening with email service providers is the fact that they don't like these big list blasts. So you got to be very careful, especially on this type of list. You need to basically, when you download the list and you cut and clean it, cut and spice it. So you've got your mortgage banker of 400 plus, you've got your loan servicers of 300 plus, is that you got to then chop that list up into bunches of 100 roughly. Okay. And then upload that list of 100, send an email out, upload a second list of 100, send the same email out, and start seeing what happens. Now, you should see a pretty good open rate initially. You'll see some emails bounce back as maybe things have changed. But keep track of who opens your emails, and that kind of becomes your hot list to dial for dollars that following day, but also reaching out to the same companies, jumping on LinkedIn and seeing who's in charge of business development or EVPs of business development at the specific servicing companies, or just jumping on their website. A lot of times they'll tell you and show you who's in charge of business development on their websites as far as their staff and things like that. And that's a great place to start with. All right. So literally you could jumpstart your note business by just dialing for dollars on things. If you don't have a bank contact, you don't have any money, this would be the best thing to start off with. And it's free. When I got started calling banks, it was a rough time. 2008, 2009, ladies and gentlemen. All right. And so I tried to pull as many free lists to find stuff. I had to get creative. And this one list I found still works to this day. Okay. Still works to this day. And you're going to see more lenders, especially popping up here on that list. Mortgage brokers are expired or voluntary surrendered, as maybe they're subprime lenders pulling out of the market, or alt A lenders pulling out of the market because of everything that's going on with COVID. So highly encourage you to use this list. It's sml.texas.gov. That's TEXAS, all spelled out. We'll put the link in the chat, in the comments on the podcast as well. So if you go to our homepage, weclosenotes.com, you can click on the link. But literally, guys and gals, if you're really interested about this, these are two hot lists that you just got to put some work in with either email blasts and phone calls, and then jumping on LinkedIn. But doing this on a regular basis, yeah, well, we don't have anything now. We don't have anything now. Okay, next. You are going to find something out of these lists. I guarantee it if you put it to work and you follow the right things to do. Now, you don't want to start calling the last week of the month. You don't want to call the last week of the year. Okay, the best thing to do is to implement this specifically the first 2 weeks of the month in reaching out, follow up the third week, and then taking the last week off, because most of these mortgage bankers, they're looking at end of month numbers from their sales staff. The servicing companies, same thing. They're pulling end of month reports with payments and things like that to get out to their clients. So maybe even avoiding the last week and the first week of the month for the servicing companies, because that's when they're doing a lot of the reporting. So highly encourage you guys to take a look at this list, download it, put it to work. Very few people are doing this. I know some people are calling and they're having success. I know a lot of people that talk a game that, oh, I want to do this, but they never use this free list of their tips to market to. And that's one of the most important things. Just get in the habit. Don't send one email and oh, nobody responded. Pick up the phone, dial for dollars, drop an email, jump on LinkedIn, and leverage those three things together to really make things happen for you. So happy hunting, ladies and gentlemen. But you can find, literally, if you add those two together, can I say literally one more time? You'll have, as I like to say, roughly 700 plus contacts. 600 to 700 contacts for you to reach out to. And that's a great starting point. You don't need a lot of sources that have product on a regular basis. You just got to be good about following up with them on a regular basis. So go out, take some action, everybody, and we will see you all at the top.